Holy crap. YouTubers, welcome to Mike Martin's channel. You might want to see other channels and other discussion about this one. This is a big one. And it's obviously by Tyler Durden, our man from Fight Club. And Zero Hedge, thanks for bringing this out for us. European banks' race to the bottom is worse since the 2011 crisis. I'm going to look into other channels, too, to see who's talking about this, because this is actually a huge deal. Holy smokes. There's going to be a huge runoff. I see people in Europe removing their money from their bank accounts. I see just what they did in Cyprus, where they put a hold on people's, and Germany for a bit, and a couple other countries, where they put a hold on people's removal of cash. I see people, oh God, I see a lot of people removing money from their accounts in crazy numbers, and they're going to put a runoff on the wealth of the banks, and they're going to put a stop to it and do a 20 euro a day or 30 euro a day like they did in Cyprus. The EU, 300 billion race to the bottom of Europe, tanking stock. Wow. No, it's not taking stock, tanking stock. As we approach the end of the dismal year of the European stocks, the question is, which sector had the worst of them all? The few trading sessions left before the end of 2018, banks and autos are in a tight race to the bottom. And Thursday's close, lenders are the biggest losers, with a quarter of their market value down, drain, wipe out roughly 300 billion euros in shareholders' money. That's a lot! Wow, banks haven't seen such a bad year since the heat of the Eurozone sovereign debt crisis in 2011. And there it is right there. Wow, that's crazy. Look at this. Guys, this is nuts. There it is right there. Sorry, my camera's got it. There it is right there. Holy crap. It's going to beat that record right there. As the final ECB meeting of the year is confirmed, the central bank will keep rates unchanged at least until next summer. And the grim outlook for the sector, heightened in one of the earlier taking stock columns, remains valid. Any attempt by the sector to break out from its downturn trend in 2018 has so far failed. So they've tried everything to get this thing rolling. You know what I'm saying? I mean, any investor will look at this and say, "Wow, hey, it's time to buy now." Well, I don't even know if it's time to buy now, because I think these things are going to go into negative territory. Holy smokes. Perhaps it's no surprise that banks face a wall of worry from investors, and nothing seems to be able to help them move forward. Repeated calls from some analysis and the sector is the sector is cheap hasn't triggered any significant buying. So, like I said, it's cheap. Why isn't there no buying, right? A good example is Credit Suisse's buyback and dividend announcement on Wednesday. That's horrible. The more buybacks you do, the more empty shell the company becomes, because you're hollowing it out, and that's what's happening. That didn't even raise investors' interest in the stock. However, near its low, while any return of capital to shareholders is welcome, the dark clouds over its investment banking outlook seemed to weigh more. Yep, the dark clouds. So here's a grim silver lining. It doesn't matter how much the rest of the market, since the financial crisis a decade ago, the influence of the banks over broader European gauge has fallen dramatically to a point they now barely move the STO 66600. So the European stock market, the banks would basically be the driving force in moving the markets around. Now it's not even moving the thing. I think maybe even oil or anything else is better. But man, what's happening in France with the yellow vests and all this crap? I'm going to try and get someone on in France that speaks English that could give us a kind of an insight on what's happening in France. So I got a gentleman that's moving to France that I know of, who might be moving to France in the next couple of months, and I would like to maybe ask him, how it's going to go and where he's going to move in France, and is he going to join this movement, Anyways, so what could help the shares regain their vigor? It's vigorish. I use that word once in a while on my channel. Although merger talk seems to find fruitful speculative ground. Large cross-border deals remain a fantasy. But domestic love stories might be one of them to keep an eye on the next year. Most prominent is the key. While the merger is far from certain, market reaction shows... sorry, I missed the line here. Sorry. Certain... Oh, did I... Oh, yeah, right here. Ongoing chatter of Deutsche Bank, and Commonbras Bank, the worst of the third-performing stocks in the Stocks 600 Banks Index. While any merger is far from certain, market reaction shows that investors, or at least algos and punters, are betting on any consolidation as the last resort to improve bottom line. So, yeah, a consolidation, you cut half the staff, and a good merger might bring things into light. Italy's banks have also been very much in the spotlight this year as the country's new populist government and its fight with the European Union over its deficit target pushed up country's yields. The FTSE Italia All-Share Banks Index is down 26% since the start of the year, with the nation's largest lenders, UniCredit and Intesa, down 30 to 23% respectively. Here's the top-down factors remain the biggest share price drivers for Italian banks, and calling the political outlook remains tough. So here it is. Concessions from the Italian government about budget coupled with the shift into focus towards France's potential target breaching deficit next year may be a catalyst in Italian banks needed to regain investors' favor. So with Italy, in my opinion, the new president and the new government that's in there, they're more focused on the backlash of immigration than they are economic-wise. I think they need a good economic team in there that could come in there and kind of figure something out. Like a crash team, a team of crash experts that could go into Italy and start reforming or fixing what needs to be fixed and cutting what needs to be cut. But the current government is more pushed on fixing their immigration issues and the backlash of what's happened with the immigration into Italy. So Italy's looking to fix that problem first, but now they got this banking sector on their heels. Hopefully that this newly elected government could move into different positions and try to recuperate its immigration problem before the banking sector gets any worse than it is. While some may view the sector as cheap, it still seems that being bullish on banks is a contrarian view. This made the Dutch bank recent strategist call even bolder. They forecast 50% outperformance of European banks by the end of the first quarter of 2019. I got to see this for myself. As the Euro PMIs improve, the bond yields rise, yet the ECB President Mario Draghi said risks of the Euro area economy is worsening. 2019 isn't likely to start on the most optimistic note. And if you're gloating at the fortress balance sheet, the U.S. banks, the BMO's Brad Wishaw notes that price and time are playing a familiar hand in the U.S. stocks. While we learned in 2018 central banks trump everything. When the global liquidity peaked in Q1, markets peaked. When we remain in deflationary world which cannot handle a 10-year treasury yield above 3%, the investors have no satisfactory answers to the existential question of, if no stocks, what? If not tech, what? If not the US dollar, what? Well, guys, I think the only thing that's safe to say is gold and silver. Gold and silver is the only thing that's the only thing that can protect you against any inflationary changes. It's a great hedge against your dollar. So let me know what you guys think. I am not a professional economist or anything. I'm just talking. I'm creating discussion. Comment below. Let me know. Like, this European banking is what drove their stock markets for the longest time, giving out some of the best equities, giving out some of the best perks for investors, and now it's tanking. Bad. Let me know what you guys think. And I know France, the Yellow Jackets, a lot what's happening in France has to do a lot what's happening right now in these markets too, because the rest of Europe is watching with a close eye. Because how many countries or governments betrayed their people? Let me know, comment below. Thanks for watching.